Welcome back. Let's keep the conversation going. Time to get some fundamental ideas into this market. Deven Choksey of KRChoksey is with us for exactly that. Deven, good morning. Great to have you on the show as always. I want to kick it off by talking telecom because we've woken up to this news of some interesting developments. Jio making more inroads or trying to make more inroads into the postpaid side of things with this new family offering. I think it's an aggressive pricing they've gone in for. How do you expect things to play out? And what is your call on both the stocks, Reliance as well as Bharti?
Yeah, Surabhi, good morning. Well, I think as I understand, this family offering plans is largely to capture the customers which are basically going to be utilized for the 5G network. In a family offering plan, I think the larger amount of offering is also included along with the data. So data share has been given, which is a significant amount of, I think, incentive for the family to shift over. In my viewpoint, I think you have the only two ways in which I think you can possibly, I think, grow this entire business. One, keep on adding additional customers, and on the other side, I think keep on having a higher amount of usages, which would possibly mean that your revenue and the profit would drive the activity faster. I guess I think on a 1 lakh crore kind of a revenue book, about 50,000 crore EBITDA, this is the run rate that the company has already achieved. And as this particular plan is launched, I believe that I think they hold the power of compounding at the rate of 20%, I think, on this particular run rate. So obviously, down the line 4 years, you are likely to see the size of the book getting doubled to 2 lakh crore, and I think the EBITDA to getting around 1 lakh crore. So this is where I think the entire equation is set based on the numbers that we calculate as a part of, I think, this launch that they have done.
Okay. Deven, hi, good morning. A smaller segment, but a segment definitely in the news is this entire railway piece, right? I mean, we just heard about Titagarh Wagon being the lowest bidder now for an Atmanirbhar project. Earlier, they bagged that Vande Bharat project as well. From an investor standpoint, long-term investing, do you think if someone hasn't been able to capture this rally in railway stocks, now is not a bad time?
Yes, Sonia, good morning. Well, I think always there is a good amount of opportunity given the kind of spending the government is doing in entire infrastructure space, railways also included. So from that perspective, the higher amount of order book getting released for most of the companies, I think is a very welcome news. Uh, Only caution here is the buying at a price and a valuation, because in railways business, the margins are always watertight, and most of the companies would end up winning this particular contracts on EBITDA margin of between 5 to 7 or 8% at the most. Given that kind of challenge and given the kind of cost push kind of a challenge that they would have, giving any kind of a premium valuation to this company under the euphoria that they have won higher amount of orders, I think would be not rewarding for the investors. I would remain a little bit watchful on that particular aspect. Yes, in a fall, in the market fall like this, what we are currently seeing across the market, that gives an opportunity because that is a time when probably you are getting valuation cheaper and the downside risk in these stocks are protected. So this is an opportunity at a lower price. Certainly, I agree with that part.
Devin, hi, morning. Bandhan Bank sold off some 5%. We reported yesterday they're looking to enter the insurance segment. The other microfinance, on the microfinance side, there have been worries and the performance has been very patchy. Every couple of quarters, there is hopes of a turn, which has not worked out. So your views on Bandhan? And then the Adani Group stocks all reversed after many days of some relief and repair. So any thoughts there?
Hi, Prashant. Good morning. Well, I understand with the rising interest rate scenario, the liability side is going to be a troublesome activity for many of the NBFCs and including for microfinance companies. That's where probably I think they would face higher amount of challenge because the cost of fund increases, and here the microfinance companies particularly they enjoy higher amount of margin spread. If your cost of fund increases and if you're charging higher amount of margin, possibility of I think you building the non-performing assets in the book remains very very high, and that is an area of concern. So maybe I think that's one of the things which I am not very comfortable. In fact, I always believe that I think given the choice, you have relatively better opportunities available into the larger corporate banks, so strong ability to manage the liability side well, and at the same time using the technology and the fintech at the front end they have the better ability to expand their reach and adding into the quality of borrowers. So we remain more convinced about the corporate banks, and with the corrected valuation in some of the cases, they remain relatively more attractive play vis-a-vis the microfinance companies. Coming
Okay,
to Adani
fair enough.
stocks,
Yes, go ahead.
sorry. Uh, Coming to Adani stocks, which is your second question, I believe that I think the market is remaining extremely concerned at this point of time on various technical parameters which are emerging, nothing to do with the fundamentals and the profit prospects of Adani Group. They remain as convincing as they were before. I believe that I think the technical fabric of the market is weakening and weakening, I think, very sharply. That is a concern also. Most of the traders are basically wanting to take an exit. Get an opportunity, mature is coming to them. Adani Group of stocks have risen, I think, from the lows and they have recovered. So those who are stuck with the long position, they would find an opportunity to exit, I think, at a higher price. That is the reason for which I see the kind of fall that one has seen yesterday into the market.
Okay. In fact, just on Bandhan Bank itself, I take your point that in a market like this, I guess it's better to stick with some of the larger corporate-facing banks. Bandhan Bank has, in the last 3 months, lost almost 25% of its value, and that's in 1 month, it's down 13%. So I think better to, even if you're sticking with banks, better to stay with the larger corporate banks. Take that point entirely. Let's do one thing. Let's also get a quick corporate voice in now. Finolex Industries has commenced commercial operations of the PVC fittings in its Pune manufacturing facility. Now, this facility has an annual capacity of 12,000 MT. Ajit Venkatraman, who's the CEO at Finolex Industries, joins us now to talk more about this development. Ajit, thanks a lot for joining in. You've commissioned this new plant, so tell us a little bit about it. What kind of